So, Maestro, what are we doing today? Well, we're going to talk about where the floor is for Bitcoin and also how we called out this New York reversal. We're going to talk about OpenSea getting sued for $1 million. We're going to talk about how the CEO of KuCoin thinks the metaverse is mostly FOMO and YOLO. We'll also talk about how El Salvador is proving to the rest of the world that Bitcoin matters. Let's get into it. Welcome to The Long and Short. Maestro here. Thanks for tuning in. Every day on this channel, we try to make you a better crypto trader by showing you smart money, price action trading techniques that work in this market. Okay, it doesn't matter if you're a long-term or short-term trader, we have something for you. I think a lot of our new subscribers are finding opportunities in this market just based on the levels that we're calling out. Our levels get hit. That's what we like to say on this channel. So salute to all of the subscribers and the people that tune in. Let's go ahead and get into it. Okay, so our trading philosophy is very simple. The first thing that we do as we approach each trading day is get an idea of the market sentiment. Now, there's a number of different things that you can use in order to gauge sentiment. But for the most part, the price charts will tell you how the market feels during the course of the day. Now, you can use a lot of different things like media, the price charts, social media, trends, whatever it may be to give you the edge on how the market feels today. But what we like to do is take a historical perspective, look at things from a long-term perspective, and then sort of encapsulate all of that knowledge into our trading decisions for the day. If the weight is short, then we're looking for grabs of liquidity to the top side or imbalances to get filled to the top side. If the weight is long, then we're looking for the opposite, right? Grabs of liquidity to the bottom side, imbalances to get filled to the bottom side. Once those market conditions confirm themselves, we're able to take a trade with a high degree of confidence because we are supported by the institutional weight of the market. Basically, the sentiment added on top of the institutional move that should happen based on what we see in the price charts, the algorithms, and a number of other different things, right? You put all of this together into a nice little package and you have a trade. So this is the way that we first take a look at the market through a website called Look Into Bitcoin, just to get an idea, long-term perspective on where price may be and where the turnarounds may happen, because right now, unfortunately, we seem to be in a bear market. So let's take a look at this. The first thing that we like to look at, of course, is the Fear and Greed Index. Now, you're not going to use this alone to build your sentiment. Some people do. Some people say if the Fear and Greed Index is 20, it's a good time to buy. We don't think so. You need a lot more evidence in order to make that a trade for yourself, okay? So we just come here, take a look at this number. Fear and Greed Index is 20. Cool. Moving on to the next thing, the HODL ratio is going to show us where a lot of the buying interest comes in for Bitcoin. And it's mostly when this HODL ratio falls into this green area. Being that we're swinging in the middle of this range right here, we're anticipating that if price were to really dramatically fall and start to push its way into this green area, you're going to start to get a lot more interest in buying. Next chart that we start to look at is the reserve risk. Now, same principle. Now, if you zoom out on the reserve risk, there's a few interesting things that you can pull out from this chart. This little blue line here below the darker blue line, this is what you call the MVOCD. Now, anytime that this line touches the darker blue line, you start to get sort of a decline in price, okay? Or that's the end result. And these charts are kind of hard to view because you can't really zoom and scope them out in the ways that you want to. You can only kind of zoom into certain areas. But the easiest way to really look at this is not to concentrate on these two blue lines at the top. It's really the red line at the bottom, which is the reserve risk. Anytime your reserve risk starts to creep into these green areas, it seems to be a good time for Bitcoin to bounce. Okay, so this is really the only reason why we use these charts, is to understand where on some of these longer term perspectives things are being aligned when it comes to Bitcoin price. So the reserve risk, the HODL ratio are two ways to look at things from a longer term perspective. The next thing is the MVRVZ score, which again, same rules apply. Anytime that the price does pump into these lower green areas, okay, you should be expecting a bounce. For each one of these charts that we're displaying here, you're seeing where price is starting to creep its way into these areas where it's mostly opportune for you to get in. This is the way you want to think about it. When price is the most depressed, when price is being pushed down the most, it's usually the best time to get in, but you don't want to catch a falling knife, right? These are the charts that will help you avoid the falling knives. I know a lot of people bought at 40K because they thought that 40K was going to be the floor that Bitcoin bounced off of. Not so much the case. Those people are in pain today. Those people are feeling it today in their portfolios. Being patient from a long-term perspective, using these charts and being patient is the best way to go. Okay, so we'll continue to track this for the longer term perspective to get an idea of when the most opportune times to buy are. Okay, so according to the R how to ratio, the reserve risk, the MVRV, Z-score, we may have a little bit more pain to go in this market before we start to reach some of these areas where the most opportune buying opportunities are taking place. Bitcoin investor tool, and this is basically just a standard deviation tool, right? And as you notice, whenever price dips below this, it does rise. So this is another chart that's showing us that Bitcoin may have a little bit more pain to go in the market before we start to really see that rise. Okay. And then lastly, what we have here is the 200-week moving average. And this chart is pretty nice because Bitcoin doesn't really dip below the 200-week moving average. And as you could tell, if you were to zoom this chart out, every time Bitcoin touches the 200-week moving average, it does bounce from there. Okay. So this was the last bull move from around 5K. Last time it touched all the way up here. Now you're starting to creep a little closer to this line. Okay. And this is what we're going to use to track the actual bottom of what we think Bitcoin is going to be. So right now, according to the 200-week moving average, the bottom for Bitcoin is 19.9. Do I think price will go there? Not immediately, but you could see something like this after FOMC. That could be something that projects the price down. If you start to see some conflict, the market will get shocked in a way, right? Overseas conflict. The market will get shocked in a way, you may see a price go down. But if we were to get to these levels and then we have confirmation with all of these other tools that we just viewed, that may be the bottom. Okay, so we're going to watch this intently over the course of the next few weeks to see how things are going to go. Let's talk about a little bit of news because I have an opinion about some of this stuff in regards to the metaverse and OpenSea and also El Salvador, how their GDP has actually grown after adopting Bitcoin. Let's take a look. Okay, so the first news article we're going to cover today is about OpenSea being sued for $1 million after some guy lost his Bored Ape NFT in a phishing attack. All right, now I would like to say that there's blame on both sides when it comes to this. OpenSea is definitely negligible when it comes to leaving that back door open on their website. And the gentleman is definitely negligible for clicking on any email that you cannot confirm from the actual website itself. So here's the thing that I think a lot of folks fail to recognize when it comes to the crypto space. This is the front gate of a technology in a lot of different ways. And so when it comes to security, whenever you're entering through the front gate and you're the first person through that gate, you're going to be the one catching most of the bullets, most of the hacks, most of the issues. You have to understand that when you're going through the front gate of technology, you will be the guinea pig for whatever happens via that technology. A lot of these folks that came into the NFT space because of the potential that it offered, they are catching the blows when it comes to things like hacks, when it comes to things like their entire wallets being wiped out of all of their NFTs. And unfortunately, it has to be like this in order for the space to mature. The companies that focus on security and really bringing something to the market other than a JPEG when it comes to NFTs will be the companies that win. Okay, so let's dive into this. Timothy McKinney has officially filed a lawsuit for at least $1 million against non-fungible token NFT marketplace OpenSea. In the complaint, he accused the platform of negligence that resulted in him losing unquestionably valuable Bored Ape Yacht Club NFT. Now, the way that he values his NFT, he sort of compares it to Justin Bieber's NFT. Now, Justin Bieber's NFT is worth millions of dollars because it's Justin Bieber's NFT. Just because Justin Bieber's NFT is worth over $1 million doesn't mean yours is. You can claim rarity as much as you want, but you want to know what people really want? Justin Bieber's old NFT. What really matters is which celebrity owned this, which celebrity had his hands on this first, and now I have it. That's worth more in real life than just the rarity score on an NFT. So this was his Bored Ape, okay? Now tell me, guys, do you really think that this image is worth $500,000? Here's the thing that I want everyone to understand. when it comes to NFTs. If I buy Bitcoin today and I want to sell Bitcoin tomorrow, there's someone who wants to buy it from me tomorrow. But if I buy an NFT today, there's no guarantee that there's someone who wants to buy it from me tomorrow, especially for whatever price I want to charge for it. And this is the problem with NFTs. You have a piece of artwork that you have to actively go out and sell. It's not like everybody's going to look at your NFT and then the highest bidder is going to win. There's not an auction every day for this, even though OpenSea tries to make it seem like an auction. It's not. You have to actively go out, promote, sell this thing. And if your NFT is not being sold to anyone because no one wants to buy it, then you are essentially stuck with that NFT. With essentially any other cryptocurrency, you don't have that problem. It's not like I have to go out and find a buyer for Bitcoin or post my Bitcoin on Twitter to say who wants to buy this today. It's not happening. Okay, so that's the main difference between cryptocurrency themselves and NFTs. All right, and it's going to be the same thing for any non-fungible token. You will have to actively be a salesperson for that non-fungible token that you want to actively sell. All right, and I think that right there, just that element alone, is what a lot of people overlooked when it came to this space. Plaintiff's Bored Ape has a rarity score. Now, here's the point that I think is ridiculous. The Plaintiff's Bored Ape has a rarity score of 138.52 and a rarity rank of 1392, significantly rarer than Justin Bieber's. Okay, so if you look in this article, this little paragraph above, he says that Justin Bieber's Bored Ape 3001 is selling for 500 ETH or 1.3 million. Now, he's saying that his ape is a lot more rare than Justin Bieber's ape. But again, nobody cares about the rarity score on OpenSea. People care about whether or not Justin Bieber owned the NFT guy. So I think you may lose in that respect. All right, but either way, this is a very sad case. Very sad for this guy. I feel sorry for him, but you wanted to be a pioneer, and pioneers are usually the first guys to catch the bullets. You get what I'm saying? You want to play the front line, guys? This is what happens. The way that I view NFTs, just like I view the metaverse, give it some time, let it mature, let the technology come of age, and then there will be projects that sprout out of that. You don't have to always be the first person to pioneer. And I think that's one thing in the crypto space that a lot of people get confused. Being the pioneer is the highest form of risk that you can take. Okay, you're the first one crossing. And so if you want to play that role, you have to almost expect that sometimes things like this will happen. All right, so again, feel very sorry for this guy. Hopefully he does see some type of return from his Bored Ape being stolen. All right, now this is a very interesting op-ed that comes from the CEO of KuCoin, Johnny Liu. All right, now we're not going to dive completely through this article, but what he says is that for the most part, the metaverse is a lot of FOMO and a lot of YOLO. So FOMO and YOLO, if you're not familiar with those terms, FOMO means fear of missing out. YOLO means you only live once. I think Drake made that term very popular. What Johnny is actually saying here makes a lot of sense. What he's basically trying to explain to people is that the metaverse is so new that companies haven't even really figured out the proper way to integrate into it yet. A lot of them have tried and they're doing some fairly cool things, but there's no real world value in regards to what the metaverse actually brings. Okay, so I can tell you my own opinions about the metaverse. Again, I think the technology is very new. It needs to grow up. And then as it goes through these growth spurts, you'll see the cryptos and the companies that are actually really making waves in this that you need to start paying more attention to. But everything right now is on an even playing field when it comes to the metaverse, when it comes to NFTs. No one project has taken the lead to say, okay, we are the Google of NFTs. We are the Google of the metaverse. If you guys get what I'm saying, there will be one or two of them, but they haven't established themselves yet. A lot of these are still going through the growing pains. Okay, so he gives a few examples in regards to companies here. The first one that he talks about is Walmart and how they wanted to explore some metaverse opportunities. Walmart filed multiple trademarks in 21 to sell virtual products, create virtual currency, and introduce non-fungible tokens, which again, I'm not really sure how that's going to work for Walmart. People go to the store to buy the same types of products. So I'm not really sure exactly how NFTs are going to work there, but I'm not sure Walmart really knows either. And this is the point. Exploring emerging technologies is essential, even if it remains unclear what Walmart wants to achieve exactly. It appears metaverse is a strong buzzword for companies looking to boost stock prices like the blockchain was a few years ago. So what's your roadmap, Walmart? Like, what are your real plans to get into the metaverse? Because just like them, there's a lot of other companies that are using the terminology itself to make it seem like they're on the cutting edge of things, but they're not actually doing anything in the metaverse. Now, NASCAR has an interesting case. NASCAR wants to improve its knowledge of virtual technologies rather than bring in new fans, sell tickets, merchandise, or introduce ways to watch events live. It's a solid sign of YOLO, sort of you only live once, as there is no clear conscience business plan for exploring this technology at this time. So NASCAR had the idea that, hey, tap into the metaverse, you can actually sit in the stadium and watch a race. Very cool technology, but what are they doing about it to actually bring it to fruition, right? No real plans there yet. What is on the roadmap? They talked about Wendy's. They talk about a number of other different, retailers, Nike, Balenciaga. Disney wants to build their own metaverse. Okay, so instead of them going through the blockchain route or a different company, they're going to build their own metaverse, which makes sense for a company like Disney to do. They have the money, the backing, the technology available to build the metaverse probably better than a lot of these other companies out here. Okay, and it'd probably be a lot more interesting. So should Disney dive into, say, the blockchain like Decentraland or maybe the Sandbox? They don't have to, and they can create a better experience. Just imagine going to Disney World every day in the metaverse. That would probably be amazing. Time will tell. How good the metaverse is really depends on time. It's still in its infancy stages, and there's still a lot of technology that needs to be developed around it, right? And in my opinion, you strap that headset to your face for more than 3 hours, you may start to develop a couple of issues. There's a number of different YouTube videos where guys have just gone in the metaverse for 24 hours and they come out the worst of it. So until there's a better way for us to interact with this without sort of strapping ourselves into a system that completely blinds us from the outside world, unless we push a button, there's going to be some problems with this that I can foresee. But it is a cool thing to think about, and it is a virtual reality that I think we're leading towards. It's just about how we adapt to it as a human species is sort of going to be the next big hurdle to jump. All right, let's talk about El Salvador for a minute, because I think El Salvador is getting ready to teach the world a bit of a lesson when it comes to applying the Bitcoin standard to everything that they're doing. All right, so their GDP grew over 10% in 2021, which was some news that most people didn't really expect. All right, and it's basically all because of tourism. The tourism industry in El Salvador has surged more than 30% since the adoption of the Bitcoin law in September of 2021. Most of the tourism has come from the United States, and they're saying that this is directly due to Bitcoin. Ever since they announced that they're going to use Bitcoin as a currency, El Salvador's GDP grew 10.3%. The country's exports, a major driver of economic growth, have also increased by 13% year over year in January of 2022. Is this working for them? These numbers would beg to say yes. Now, will other countries feel the same exact sort of impact from adopting Bitcoin? Maybe, maybe not. Only time will tell. Again, a lot of this stuff is still brand new. Let's go ahead and dive into some charts here, because there are a few things that we want to point out on a few different coins. There are some big winners today, and we did call out this New York reversal that we're going to point out how we actually called that out. First thing that we like to take a look at is the Bitcoin futures chart. So as we can see, price has definitely found its way back under this 13 EMA, which is something that we were a bit afraid of, and it hasn't attempted to bounce back its way towards the 13 EMA. So being that you're starting to get a big hard expansion away from the 13 EMA, I'm expecting price to start to pull back towards that 13 EMA. Okay, the 13 EMA on the daily acts like a rubber band. Okay, and you can see it here. If price goes too far aggressively away from it, it's going to get pulled back to it. Same thing here. Okay, same thing here. Now, when price broke away from it, notice pulls away from this band, but it comes back to it. These are the ebbs and flows in price, and usually the way you can use a 13 or really any EMA or moving average is to sort of, where's that rubber band effect going to kick in? The way that I view the EMAs is very simple. Once price finds either a high or a low, depending on how far it is stretched away from that EMA, I'm expecting a reversal. Okay, if it's very close and very tight to that EMA and we're finding bottoms, then maybe not so much. Okay, but that's really the only way that I use the EMA, and also to confirm trend, right? So right now we can see that the trend is down. Price is starting to extend itself away from that EMA. So being that we're starting to find some bottom areas here, we're anticipating that price should start to try to bounce at some of these points. And we did have a bit of a bounce today in the market. Okay, so this may be what we're starting to see in actual price action. The open interest, though, is down. When it comes to the commitment of traders, the large speculators still hovering close to that zero line. And I'm really waiting to see when they're going to update this line, because that's going to give me a better idea of where the larger speculators are sitting. Even though prices are down, this is usually when your larger specs are looking to buy. So if they push closer to that zero line or over it, and the commercials start to move net short, this is a positive sign. If the green line for larger speculators starts to move down some, then chances are we're going to see lower prices. Okay, the smaller speculators, we're not really watching them too much, because we understand that all they're going to do is essentially set themselves up for whatever the larger speculators want to do. And this is the yin and yang of the market and how these three lines are played together. Watching these three lines gives you very good indications on where price may want to move. Also, bull power versus bear power on your elder ray. You see the bears have taken control of the market again. You do have a sharper decline in regards to money leaving the market. Okay, but this isn't necessarily anything to be completely concerned about. You still have a good amount of money in the market. Okay, and we'll take a look at market cap in a second. And we've sort of come from a distribution phase, starting to peak a little bit into an accumulation, because prices have been pushing up a little bit today. Let's dive into the actual charts. Let's call out this New York reversal, how we were able to call it out, cut through a couple of altcoins, and then that'll be it. Okay, so first thing we're going to talk about today is the Bitcoin 1 hour chart. And we do want to call out this area here. One thing that we mentioned was that price was rallying a bit. And what we wanted to make sure of was that we didn't get caught in the New York reversal. So the reason why we're able to call these sort of reversals out is because we understand that New York sort of does the same thing almost every day. Whichever way they're moving around 9 or 10 a.m., they'll reverse that typically sometime around the afternoon. Okay, so if price is bullish around 9 or 10 a.m., more towards the afternoon after lunchtime, they typically tend to reverse that price action. Okay, and they do this a lot. All right. Now, how are we able to actually track this? Because we're not watching New York every single day, right? We built a spreadsheet. Let me show you guys. This is the added value that you get if you just sort of take the extra step in analyzing price. So what you're looking at right here is just an sort of an encapsulation of everything that's been happening since the beginning of the year with Bitcoin price. We break this down in a number of different ways. We have bullish minor moves and bearish minor moves. These are moves anywhere between 0.1% and 1%. Anything under 0.1% is essentially a consolidation in our eyes. Then we get into more mid-size moves, anything over 1% to 5%. Okay. Then we get into major moves, anything over 5% in an hour. Each one of these candles are broken down in an hourly basis because we want to understand hour to hour, how does each market react? Okay. And as time goes on and we mark off each one of these moves hour to hour, okay, we start to build a heat map and we start to get a tendency of what's happening with price as price moves forward from day to day. Now, this isn't an end all be all of trading, but what it does start to point out to you is where things happen. So for example, around 2 a.m. is when London usually opens, right? They usually give some sort of bullish push around 2 a.m. And how do we know that? Just look at this number here. It's 28 compared to all of the other possible outcomes in price at that time of day. Okay. We can also look at the 12 a.m. hour, also fairly bullish. Okay. We can look at the 8 a.m. hour, also fairly bullish. We can look at the 10 a.m. hour, also fairly bullish. But this gives the example of the New York reversal and how we're able to point it out. If 8 to 10 are usually bullish, okay, look at what happens at 11, 12, 1 p.m., okay? By 2 p.m., you seem to get another reversal of whatever's happened between sort of the after lunch hours, okay? So just building this type of knowledge in your brain gives you an idea of how price may react during certain parts of the day, okay? Now, one thing that we have been using this for is to get a gauge of where price may actually go, because usually what happens is price will play the opposite end of the tendency, okay? And I think this is all based off algorithms. But if you're able to track it like this, you can start to pick out how the algorithms are reacting. If price is mostly bullish and it's been that way for 2 or 3 weeks, chances are during that hour is going to turn bearish. It's the way that these algorithms seem to work to keep everyone off guard and not be able to build any real anticipatory, measures on how to judge price from hour to hour. We are attempting to tackle this. So as we continue to build this heat map over time, we're going to do this for a year, 2 years, 3 years. Over time, we're going to get a real gauge on what happens in price during certain quarters, during certain times of day, during certain hours, during certain sessions from New York to Asia to London. We will be able to pinpoint and pick out what the most probable move is on the day based on tendency. All right. So that's how we were able to call out the New York reversal. It's been doing it all year. How many people are actually able to see this and point it out? Well, you found one. Welcome to the long and short. All right. So let's dive into price. Okay. And let's talk about this New York reversal and how this actually came in. Okay. And actually, let's show the clip where we called this out so that people are aware of what we were pointing out. Okay, so we're going to take a look at the Bitcoin 1 hour chart, and there's a few things that we want to point out here. A lot of imbalance left to the top side. So can price push up and take out these imbalances? Yes, it can. But in all reality, if price is sort of in a negative zone and you have a bearish bias and you have a bearish trend developing, then the only move up will be sort of a retracement to take out that imbalance and then continue lower. You can see that same exact price action here. Okay, so you have imbalance here, imbalance here. Price comes up, fills that imbalance, and then just sort of topples over. All right, so you have imbalances here. Do not, under any circumstances, get hyped up over any rallies into this zone. Okay, these essentially will be retracements right back down. Even if we draw a Fibonacci on this, we can probably see some correlations in this. So let's go from the top to the bottom because we're going short there. Right, so as you can see, your golden zones are aligning right there. Okay, so let's just kind of blow this up a bit to see. So as you can see, right, if price were to come back up here, it falls right into sort of the golden zones of retracement for the Fibonacci to refill these imbalances. So if you're going short, these are the areas where you're looking. You have confluence here. Okay, this is where price dipped under, boom, came back above. This is your area to go short, okay, if you're thinking short. Okay, so you're able to see here, right? Price did create these imbalances, stalled. This is where we started to talk about the New York reversal, okay? Price came up, fulfilled these imbalances very quickly within an hour, and then reversed, right? Right at the time that we were saying the New York reversal typically takes place, 11, 12, 1 p.m. By 1 p.m., that's when the real move kicked in, okay? And then they finished you off at 4 p.m. Same type of stuff happens in New York all the time. Okay, so it doesn't matter if it's bullish or bearish. These are the typical patterns that you'll be able to try to pull out of the New York session from the open to the close to be able to get a gauge on where you may be able to take some opportunities. All right, but also price did sort of create this low here, sort of set the table, crash through, grab liquidity to take it to the top side, and now it's really just sort of swinging in this range from this previous area of imbalance. Okay, so price is doing the normal thing. It's ranging, it's falling, it's ranging, it's rising, it's falling, it's ranging. Same range that we were talking about pretty much since January, right? And we had an idea that price may start to range out going into the FOMC, right, which is the Fed meeting in March. And the reason why we had this feeling is because there's a lot of uncertainty in the market. There's nothing really pushing this super bullish, and there's nothing really telling us that we all should sell. All right, so the market, when you have this equilibrium per se, you will swing within these ranges. There'll be good days, there'll be bad days, and today we seem to be having a pretty good day on the crypto market. Okay, so let's take a look at the overall market, take a look at a few coins, and then we'll close out for today. All right, taking a look at the total crypto market cap right now. Price is currently sitting at 1.685 trillion. Fairly weak zone, but we are starting to climb our way back up towards that stronger area of price action when it comes to the market cap of around 1.876. We like to see price stay above this. Now, if we just take a look at charts, we can see we did bounce off of this level, cracked under it, cracked over it, right? And this is sort of what we call the whale rearing its head. Will we see a nice strong push up out of here? Not really sure. Not too confident in that respect either, because the FOMC, as you guys can see, is definitely approaching and creeping closer. We're already near the end of February. This is less than 3 weeks away. All right, so just paying very close attention to price here at these lower levels. We do anticipate for us to get some bounces here, as we're seeing, right? Lots of different wick action when it comes to the market cap. in the charts here. But will we break lower than this? Very good question. You can possibly see these levels. Anywhere under 1.489 trillion, though, I think we're in trouble. So that's why that white line is drawn there. We are watching this intently, very closely, to see where the bottoms may be found. Okay, so taking a look at the Bitcoin daily chart, always like to point out here from the scale in to scale out positions, this was a beautiful play that if you would have been following along with what we're doing here in the market, you would have been able to take some profits on this call here. Okay, so I think people are starting to understand now more than ever why taking profits is valuable for you. Even if it's just 10, 20, 30% out of the actual trade, you want to take something home just so that you have that dry powder. So we preach this every single day on this channel. It doesn't matter if you're invested in Bitcoin, ETH, doesn't matter what your conviction is. You want to take some profits out of this market. For the most point, we think people should hodl Bitcoin because to us, this is the sort of the king crypto that will be around for 20 years, no matter what, right? Everything else, suspect to a certain degree, in my opinion. But when it comes down to Bitcoin, you can hodl this, but don't be afraid to take profits in Bitcoin either so that you can buy more if in fact the price does drop. So if in fact you were playing this out, right, scaling in here at these levels around 34 to 32, when everyone was pretty scared about what was going to happen with the price, and you saw this rally up to 45, okay, this was a great profit to take. All right, great percentage move from, let's say, for example, you got in on this bottom candle here to the top. Let's just be fair about it, right? That's 26% when it comes to Bitcoin. All right, so beautiful type of move here, just following our scale in, scale out. Okay, but right now Bitcoin is trading at 37,940 in a discounted zone, we like to say. And I think that Bitcoin price, you know, these little floors here, these lower areas in price, you see lots of different wick action right here. You're going to get some buyers at these levels. Okay, price bounced today really around, let's see, 36, we'll call that 36.4. Price started to really bounce. And if we take a look here to the left hand side, you know, you do have sort of an even level of liquidity set here. So this is a bit concerning because price could definitely come back down, spike through that. But if it does, then we're expecting higher prices as well because this is where the buyers are coming in, folks. All right. Of course, we also like to compare ETH, right? So taking a look at Ethereum, same premise applies, right? Buying in these lower discounted zones at these scale in levels that we draw out to the scale out areas, right? You can see where price does play around here for a little while, but it really doesn't come back to that area, right? Buying opportunity, selling opportunity. These are the areas where you want to take profits. And we have a tutorial coming out on how this is actually done and built up on a chart so that you guys can do this for yourself as well. All right, couple of movers that we wanted to point out today. One was Terra Luna. Very nice day, 7% move on the day, but starting to retrace some. Okay. And again, as you can see, scale in, scale out levels, right? Luna is a very big coin in our opinion, right? It peaks its head into the top 10 and, you know, it kind of stays there. So price action, positive price action is what we've been seeing for Terra Luna. And again, from a discount area to a low premium area, scale in to scale out, this is taking profit. If we were to draw this out, again, let's be fair and go from the candles to, let's just say we hit our scale out zone and jumped out there. Another 23 to 25%, all right? Big moves on the daily, big moves on the daily, okay? Pretty sure that anyone would be happy with a 25% return on their investment in about 2 weeks, all right, or a little bit less. The other mover that we had was Sandbox. And again, another example of scale in areas to scale out areas being hit and then price coming back down to them, right? Look at this, guys. This is as easy as it gets when it comes to you just finding levels to get in long term, a couple of weeks. This right here materialized into, let's just take a look. From the bottom of the candle to the scale out area, let's say around 56%. All right, all within the same time frame, guys. So if you add up the Bitcoin play, you add up the Sandbox play, you add up the Luna play, from scale in to scale out, you've made over 100% with 3 different coins. All right, and you can apply this method to really anything that you're doing. So again, we have a tutorial coming out. I'm pretty sure people want to learn more about how to set this up for themselves on the charts, and we're going to show you guys. All right, so I think that pretty much is going to cover the market for the day. We're going to sort of get away from covering all of these different coins. We understand that this does sort of drag the video out, and there's a lot of important points that we can make if we're not so worried about covering everything. Okay, so this will be the tone and the format of the videos moving forward. We're going to take a look at Bitcoin mostly, take a look at a few coins that moved for the day, and just continue to give you examples of, just using a very simple method of scaling in to scaling out of these positions will give you plays every single time. We just showed you 3-4 examples of it, and hopefully people start to catch on to this because no one else is showing this. All right, so if you do like this content, if you like what we're showing you guys, if you like what we're sharing here, please go ahead, hit the like, subscribe button, hit the bell notification so that you're notified whenever we do post content, and share this with somebody who also wants to learn how to trade a little bit. All right, more tutorials, lots more information, lots more content coming soon. So it's your boy Maestro. It's the long and short. Salute. We out of here. Peace.